Good morning, options players. Today is the 10th of March here in Penang, Malaysia, which means that's the evening of the 9th of March where you are at in the US. I just wanted to give you guys a real quick preview of some of the complex concepts that we review in the basic training course that starts on Friday evening at 8:30 p.m. Wall Street time. Some of the things that we learn and we teach in the Options Players Basic Training course is how to look at a chart on any given name and look at it from the perspective of a chess player and anticipate moves over the long term of what actually is expected, and then measure what we do versus what's expected and what actually happens. So not to go into huge details here, we do have something called the 1030 dance, which talks about the stock going from Bollinger to the Bollinger Band and how it interacts with the various moving averages like the 10, the 20, and the 30 simple moving averages. What we have here actually on GLD is we actually have a failed pattern with a very clear downward trend. We got a Fibonacci on here. So the 1030 crossed here, we got a couple of moves, it's failing, it's coming down. I see a very clear pattern here that potentially it can go down all the way down to the 112 region. So are there any strategies that we can implement to take advantage of that from a risk-free or potentially very low risk-free perspective? What I'm currently looking at actually is what's called a broken wing butterfly. This is a concept that we'll teach in session 5 of the course, which is a way to basically spend almost no money or zero money in giving ourselves an opportunity to take advantage of a situation if it actually happens the way we think it might. If it doesn't, we're not out any money. So what I'm going to do potentially is I'm looking at buying one GLD 331, so it's a quarterly option at the 114 put. I'm looking at selling two GLD 331 112 puts, and I'm looking at buying one gold 331 108 puts. And the reason it's a broken wing is your strikes are uneven. You only have 2 between the short and the long here, and you have 4 here. So it adds a little extra risk, but we do have an opportunity to potentially buy this for very, very low money or even zero money. The mid-price end of day on the 9th, so your day, your Thursday, is 21 cents per contract. However, if GLD does retrace up on Friday, which I think it may do, there's a chance that you could potentially buy this for $0. The total margin hold, if you are able to buy this for $0, is $2 per contract. And what I would have is I would have a trade plan if I'm filled to close it if and when GLD hits 112, which would be the maximum profit level, depending on how much time you have left on the contract. So what I'm doing is I'm actually putting an order in for 0. And if it fills, it fills. If it doesn't, it doesn't. And we'll see what happens. As I mentioned, we are beginning our next session of the basic training course for options players on Friday evening at 8:30 p.m. Wall Street time. That is on the 10th of March. So you got less than 24 hours, or about 24 hours. And if you want more information about this, please contact Steve at optionsplayers.com for registration. There are a couple of spots left. So we're looking forward to getting going in this and teaching a whole bunch of nice fun concepts and ways for you to profit and eliminate risk. So I hope to see you there. Thanks.